All right, hello everyone. This is DayTraderRockStar for DayTradingRadio.com, and just to do a little market recap, S&P review, and some education here today, going into this next week or actually the 1st of June. So a lot of things to discuss, and hopefully I'll do a few videos over the next 2 days because it is the holiday weekend. I hope everyone's having a good holiday weekend. So I wanted to actually get into the office and discuss again how to survive volatile markets like this. Now, looking at the S&P 500 here, we see that on Tuesday we had a nice, you could really break this down to everything that's in a textbook. Reversal candlesticks, nice one on Tuesday. We got a follow through off of that, which was very nice. We pushed right up against the 200 period moving average, got stuck there. Everything kind of textbook here. The reversal here with the candlestick was timed perfectly with the stochastics. Stochastics came down into an oversold level. And right at that level, that's my first indicator. I want to try to take all my stocks into that turn up here. It's very important to start watching for these crossovers. The KD line, when the K crosses the D, that should be a big effect on your picking of stocks here. But with the S&P here, not going to predict the markets here for you. I mean, a lot of people are going to try to predict the markets here, but I could tell you what to do when the market's set up. What we want to do is recognize everything that the market's doing. That way we know the risk-reward trades we want to take in it. So looking at this daily chart, people can look at the daily chart. And what I see is that the 200 period moving average, stochastics are kind of bullish here. But that's all you're going to gain from this. The momentum's okay. We don't have the volume chart on here, but you want to, take a look at volume and stuff. But basically, we probably have a little trend line here developing down this way. And other than that, we have some spike low reversals. We came back. We hit support back here, which was very important. So that's a good sign. But it doesn't mean that we can't pull back in this level. So let's take a look at this a little bit closer. And again, this is a little educational why you should just use your 15-minute and 60-minute chart. This is a 60-minute chart period, time period for that same S&P cash position. Now here you can see this downtrend line, which was broken. This is a pretty decent 1, 2, 3, 4, 5-day trend line here, which tagged once, twice, 3 times. Once, twice, 3 times, 4 times here. And then we got a breakthrough, a retest of it, because whenever we see the trend line broken, even if it's on a 60-minute chart, which is a great chart to trade off of this, you see the retest of that it means we consolidate or pull back to the trend line break and then buy in there. And that's always a good area to either start your position if you're not confident in buying it on a pullback away from a trend line. Then you want to wait for that confirmation. Not you want to buy the breakout. Most people who buy the breakout get caught, in a pullback, and all of a sudden they're down in the money and they get scared out, not knowing the reason why the stocks come back to these trend lines. Now, there's so much I want to talk to you about. One of the things is about program trading, algorithms that are set in the market, these black box systems that are out there trading. Now, if you're out there like me every day watching the stock market, you notice things. You notice that, how volume comes in, how volume kicks out. You think all these people are causing, is it just a group of people causing this volume, or is there, what exactly causes a stock to move down to here and then up to here and down to here? Why is there a rhythm to most stocks? Why is there a pattern to most stocks? A lot of people, I can't say a lot of people are saying technicals don't work, but there's a reason why all this works. And I was just scanning through a stock before, and I wanted to bring it to your attention. Let me see if I can actually bring it up here. Here we go. TLVT here. And I'm going to actually take down. I was doing some research on some of my for my 10 for 1,000 watch list I'm releasing tonight. So I'm actually doing a lot of research, and in that research I'm putting out this video of things, of observations and stuff. But the important thing is to know trend lines, to know timing indicators, stochastics, know your moving averages, know your patterns. All right, there's a very, very important 4 good indicators right there: trend lines, stochastics, moving averages, and patterns. And then the 5th one being support and resistance. Now, like I said, we can't predict what the market's going to do, but I know based on these patterns here, it's a very good chance the market's going to pull back, break out here once we started hugging this, and we got oversold on the stochastics. We popped up above it. There's certain levels here that I like to pay attention to, where the 200 period moving averages, compared to the trend line here. But the important thing is now, as this plays out a little bit further, we actually could get a pullback here in TLVT, and you're like, all right, well, what actually made this stock here stop here? Why did it stop here and not stop down here? Or why didn't it stop up here? Or why didn't this stock, why did that stop here and not down here or on the 200? There's reasons behind this. Why is each time, what makes a trend line? Why does a stock stop at a trend line? It's because it's program trading comes in here. Once you establish these signals, there's major computers out there doing calculations, plotting these lines and knowing exactly where to buy, where to sell, and just pretty much scalping the market like a computer would do. So you could always go back and as a trader, you're doing your research and stuff, and you have to there's so many points and stuff, and how do you even figure this out? Well, that's the job that you have to learn to do. That's what I learned to do. What everyone has to learn to do, and hopefully I could show you what I've gained here. So again, whenever you're looking at forming a trend line, of course you want to take a point of reference and have it meet up with another point and extend that and have it tested and come and fail the test. I mean, not fail the test, make pass the test by holding back that price level. So here doing my research, I said, all right, look, you have 2 points here. You definitely have a trend line. What happens if I extend that trend line right out? I'm not even going to look at it. I'm just going to extend it right out. Wow, look at that. These 2 trend lines, right? These 2 points right here, if I extend it all the way out, comes right under to where this price level came down. Coincidence? No. It's computerized. And right there's someone in there buying the stock. Someone's buying it, holding it up here, selling it right at here because it's all calculated. So pretend this area was calculated on a computer program, an algorithm, because of this trend line. And pretend this calculation is here. So of course, this is a very nice, little move here from 27 and change to $32 or 31 and change. Very nice, and you just wait for those setups to happen. All right, so look at this. We come all the way through. Now this trend line's already, you don't have to take any trades here, but there might be, here's a support, there's a resistance line here. Now starting to form, so pushes up against that. Stochastics over here, overbought here. So it's a sell signal right here. Right here, because that lines up with right here. And it's very important to learn the keys and how these things line up, because you have a resistance area and you have an overbought area. That's 2 indicators on the downside. So there's a good chance that we're going to pull back down here. So again, computer algorithms and stuff know to go short here. They know now that it's already calculated in where every point of this line moves. Every price point, it's already calculated in. And when the price level of this stock equals one of these plotted lines, boom, there's probably a program that kicks in and does starts to go to work here. And we're going to see what happens from this level right now. So this is actually an interesting stop because it's back at this level. It's not really bouncing too aggressively, but there's also another trend line down here. So I'm watching this one closely just because if it fails here, I want to pick it up on this lower trend line right here. Because I know that's where the big machines are. So that's a good example of just, I want everyone to just think about this, and email me your thoughts on this. I think it's important to realize that and have patience in this market where, you have enough patience to let the stocks come to you. That's how you're going to be a successful trader in the long run. If you try to guess, as many people try to, attempt to guess at these things, you're doing what 95% of the other people in the market are, so-called experts doing. You see on the boob tube and stuff. No one's really thinking about this market. You want to really, break this market down and break it down. So I have a couple stocks. I'm actually gonna throw out the next video because I want to make sure this goes out. So the next video I'm gonna go out is part of my research this week. I have one to probably about 30 stocks that are set up really nice, and I'm going to go through. I'm going to throw some out of here, and I'm going to take the rest and put on the 10 for 1,000 watch list on the site. So, let me get this one out to you, and just stay tuned for another video coming right up. All right. And don't forget, you can actually join me trading every day on the radio with live video at DayTraderRockStar.com, and from 9 o'clock to 4 o'clock. That's all you see. These setups, intraday setups. All right, see you there.